Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And today I want to talk about my top two sectors in the market, what's going on this first trading week of 2024. Odds are now you're watching this video because you got an email from me telling you that's up and it's on YouTube. Now, if you're not on my free email list, you got to get on it. There's a link associated with this video for you to do that. You do that, and then you'll get every single week my free stock market report from Wall Street Window. Now, this just one email a week generally. I don't do sales pitches and all that kind of stuff that you see elsewhere. We get right to it. And today, I'm just doing this minutes after the closing bell. The NASDAQ had its worst single trading day in about 2 months. Dow is up, energy stocks are up, and the two sectors I like a lot were up, and I'm going to talk about them with you in a few minutes. But if you're concerned about today's drop, Apple got a downgrade. Those seven big cap tech stocks all got hammered down, Apple down 3.5%. But that's one day's action. You got to think about it this way, too. So many people own these stocks, and these stocks went up a lot last year. And if you were in them, you probably still are in them. And if there are people that were thinking about selling and you get to December, those people probably said, look, I'm not going to sell. These stocks are doing fine. I'm going to wait to after New Year's to sell. That way I can hold off on paying the capital gains taxes till 2025 instead of this April. So I think that's part of the reason that we saw the NASDAQ fall today, because a lot of people that had the big gains coming in December said, I'm waiting to after New Year's to sell. And some of those people sold today. Now, days like today are very fascinating, though, because down days in the market give you a chance to see where the strength is, what sectors are holding up, because that's where the money is now going. And that's what I talked about in my Monday report put out New Year's Day about my financial markets forecast for 2024. That included my top sector pick. Now, I'm not going to go through the entire thing with you because it would take a lot of time. And frankly, if you're not on my free email list, you need to get the link here, click it, and then join it to get this type of information. I want to show you now. I can't go through the entire forecast in this video. I'm just going to draw a couple points for you in it. When I think about the markets, I think about what we got the averages, and we got individual sectors. And if you just want to buy the S&P 500, okay. If you want to buy just the Dow, okay. But I think you can beat the performance of those key indices by being in the top sectors and by diversifying smart. So, for instance, I hold a lot of gold and silver positions as hedges against the dollar. And not that I think this is going to happen in the next couple of months, but at some point in the distant future, I think we'll see bonds go down again, and the gold go up accordingly. But as far as the sectors go, and yes, I like some mining stocks. Um, the biggest trend that we're entering this year is the fact that the Federal Reserve said they're not raising interest rates. They're not on this rate hiking cycle. As we began 2023, they were doing that, and they continue to do that. And that caused some volatility in the markets, and particularly in October. And then when they said, okay, we're going to stop the rate hikes, we're going to stop, they now position themselves for a future cut at some point. A lot of people are saying March. I'm not trying to predict the exact day. Just the mere fact that they're not hiking anymore is a big game changer in the markets. And there are sectors positioned to benefit from that fact. And historically, these sectors go up when the Fed stops hiking rates and goes up even more when they start to lower rates. And I'm not talking about big cap tech. I'm talking about the real estate sector, the REIT sector. And on Monday, I highlighted the exchange traded fund RWR that specializes in REITs. REITs are real estate investment trusts that pay to their shareholders pretty beefy dividends with the proceeds of rent that they get from the real estate holdings. So these are dividend paying stocks. And that's why they tend to do well when the Fed stops raising rates and then lowers rates, because people want to lock in the yields of these stocks because the yields and the income streams tend to be fairly stable. And here we can look at today, RWR up 1%. So the first trading day of the year, the RWR ETF is up while Apple was down 3.5%. The NASDAQ had its worst day in about 8 weeks. This is not to say, I'm not telling you sell tech. I'm telling you that I think this is where the strength in the market is going to be this year. And it's showing us that today. The second sector I highlighted after it was mentioned here as one of the top two I'm interested in for this year is utility stocks. And again, the same thing happened today. XLU, an ETF that tracks the utility stock sector, up 1.45%. These are the company. Hey, look, if you are paying an electric bill, odds are some of that money is going to shareholders in these stocks. I own a basket now of utility stocks in my account because I'm collecting these dividends from people simply using the electricity in their house. If there is a recession at some point, the earnings in these stocks will not decline because people are not going to stop using electricity. So the stability of the earnings, the beefy dividends are very attractive as we reach this point where interest rates are topping. The rate hike cycle has come to an end, I should say. So we're in it. I think, fascinating year, a lot of opportunities. I'm not worried because the market, where the NASDAQ was down today. But I think the trick to investing for the next 12 months is to be diversified in multiple sectors, not just betting all on one thing, not just putting all your money in a couple tech stocks, but look at the sectors that have been actually outperforming the market over the past 8 weeks, since the October low, basically. And REITs, utilities are at the top. And gold had a really pretty powerful year last year because gold historically goes down when rates go up and the dollar goes up, and both happened in the first 3 quarters of last year. And gold didn't really go down; it traded in a simple range and then broke out to the upside as we went into the end of the year. And the price of gold had a closing all-time high in December. So that's exciting. That's a powerful show of strength. Not hardly any other indices had all-time highs in December, but the price of gold did. So gold is something I'm going to really be focused on this year too. But we got stuff outside gold again, reach utilities. And look, you need to subscribe to my free weekly updates. Click the link associated with this video and you'll get reports like this every single year. And a lot of it's educational information. I wrote a book, Strategic Stock Trading. You can find it actually on Amazon. Breaks all this stuff down. If you're wondering who I am, Mike Swanson, run the website WallStreetWindow, been running it since around 2006. And I ran a hedge fund for like 3 years back then too, which outperformed the stock market during that time period. The book was written in 2010. So I've been in this game for quite some time now, and I believe I know what I'm talking about. That's why I got the number of subscribers I do. Haven't done many YouTube videos though. This is the first YouTube video I've done since July. So you got to get my stuff, get on my email list to get my stuff. And let's make this a fun year.